Some of the biggest retirement risks that I see, that I've physically seen done in my client base, is gifting too much too early to their children. Yes, there's a lot of pressure on the older generations to help fund house deposits, for our children and grandchildren to get into this, crazy expensive residential property market. That for me is a really big risk because it's so emotional, and there's three generations that have an interest in this, grandparents, parents and their children. We want a home for our clients. So I see that gifting too early without doing the numbers is a really big risk. I think people being far too conservative with the way they invest. And when I look back over the last 20 years for our clients, the ones that have been growth orientated, have seen their money, lived off their money and seen their money grow because we've owned some very high quality businesses. Yes, we've got the odd portfolio maker where they've gone up by 500, 800, 1,000% return. I call them portfolio makers. There's a bit of luck involved with that. But if you are too conservative investing into cash and fixed interest, feeling as though that you're safe, the purchasing power of your money will reduce over time. So for me, the inflation risk is the big ticket item here. If you are too conservative, you will feel safe in the short term. Your money will not go backwards, but in the long term, it is a death by 1,000 cuts, and it's a far greater risk than short-term volatility in the share market. People need to understand the inflation risk above all else.